Good day, everyone. Ali is here from Safi Financial Network. Today is December 30th, 2022. Last trading day of December and last trading day of the year 2022. So, year 2022 has been finished trading wise, and the next trading session would be in January 3rd, 2023. Year 22 was bearish year for the market, obviously. We are down more than 20%, just a touch below 20% in S&P 500. And as you know, psychological level, or kind of like a textbook level for the bear market, is 20%. So anyway, if you want to slice it and dice it, today was a bear market. And this year was a bear market. This year was a bear market. And this bear market will continue next year or so. I think still we will have a bear market, at least for the first quarter of 2023. But after March, specifically after March or the second quarter, like after August, I think market will shift the structure to kind of sideways to the upside for 2023. So it's kind of like the same dynamic happened in 2007, 2008, and 2009. So if you see, lots of people are showing you year 2008 was bear market, and 2009 market closed positive, like 20% or so positive. But no one is talking about when the bottom of 2008, 2009 happened. March 2009. And if you just follow the market, so here's the monthly chart, for example, for S&P 500. Let me just zoom out and show you something pretty interesting. So this is the top in October 2007. Market had a bounce right after this sell-off on March 2008. Like 2008, market find the intermediate bottom, went up for 2-3 months, and then ugly sell-off happened after that. And here's the December 2008, for almost a year, market just went down. Look at that, market just went down. Even it didn't have like a nice bounce or something like that. It's just a pause. I wouldn't say any bounce until here, December 2008. And then 2 months after that, market had ugly sell-off as well. So this is the year 2008. As you see, it was a very, very bearish year. It was like an encapsulation phase. But after November 2008, market just went into ending diagonal. This pattern is ending diagonal. So you see lower shadows, it's very, very high, but market doesn't have enough momentum to continue the same pattern. Like, look at that. So September, October 2008 was very, very ugly. Even June 2008 was ugly. Even January 2008 was ugly. So the rest was just consolidation or regaining the energy. But look at the type of the candles. But after that, after this, November 08, market went into kind of like we call it as ending diagonal. This ending diagonal is type of pattern. As you see, it's getting narrower and narrower. Look at that. So this is the type of the ending diagonal, right? So market, and just two months in a row, look at that, 2 months bullish in a row, just getting off this ending diagonal and off to the rally, right? So I'm kind of looking for the same pattern. Still, I'm bearish for the first quarter of 2023, but look at that, market just find its bottom in March 2009. So again, if I want to just say the similarity between this year and today's market, I would say market still, look at the December candle, by the way. December candle was ugly. Anyway, if you want to slice it and dice it, it is ugly. And lots of people were waiting for Santa Claus rally. Unfortunately, Santa was in vacation this year. He didn't show up to the town, and this is the result. December was a bearish month, but if you look at as a technical perspective, it was expected. So if you don't see as a December, just look at the candles. So everyone would expect, okay, we are in a bear trend, and probably there is going to be a red bar here, just because it's going to be continuing the bearish momentum, right? So who cares? We are at the December, November, August, July, whatever. So this is a bearish trend line. Just look at the technical. But everyone, just because their expectation, everyone is asking, okay, probably we will have a Santa Claus rally, and this rally would end up at this bear momentum, and it's gonna start another a bull market, or shifting the structure to at least the double top formation, and we can get rid of our stocks that we bought here or something like that. Just look at the pattern. The pattern tells you everything, right? So months of December, we are closing below open of the November. So this is bearish. This is very, very bearish. This is kind of like an engulfing pattern in a monthly chart. And if you look at the engulfing pattern in the monthly chart, something like this on the top, continue with the bear trend. And even something like this, when it hits the trend line, continuation of the bear market rally doesn't have a follow through, and then going down, continuing the bear market. So here is another example. We are at an engulfing pattern at just right on the trend line, right? So when you see something like this, probably if you just follow the technical analysis and simple trend line analysis, you would expect market is continuing the downside. And where is it going? I think at least it's gonna be just double bottom here, but I have a level right there. So 33.52, that's gonna be my level, and I still in a camp that market will find a bottom in March, probably I don't know, second half of March, but until there, we are in a bearish momentum. For next week or so, I mean next trading week, we will get back to a weekly analysis or daily analysis. I mean daily chart or weekly chart. Probably we will get some bounces, but still I'm just looking for a downside to 32 to 3400. This is my least target. So if you want to just go with a more like a downside target, yeah, for sure we can get into this area, which is coming along with this top. So if you just put a top there, so here is the area. So you see this is a very, very nice pivotal point for the market. So whenever market or price gets there, it has some reaction. You see this is a consolidation breakout, going up, and then sharp sell off, and then pull back to this area. This is a gap here right there, so it happens right there. And also this breakout to the upside, back test, lower shadow off to the rally. So so I say 2900, 2947, so ish. That's gonna be a good level for a very, very decisive moment for the market. But again, it is very, very early to say that. I'm expecting, based on this price action, based on this pattern, I'm expecting another lower low, probably in March, February to March. We will get there in a lower low, but I'm not sure if we find a bottom here, 3200 to 3400, which is at 33.52. That's going to be very, very decisive moment, or we are getting stretched down to SMA 100 on the monthly chart. When it finds the bottom of the COVID crash, and also this COVID crash is coming to this consolidation area related to 2000, almost 2015, 2016. So that area is very, very important. And also, if you are again want to do very, very simple trend line analysis, here is the trend line. If you want to continue going all the way there, so probably market find its bottom later, like later 2023. I'm not sure if it gets that much down there, but again, there are lots of possibilities to the market. And even if you just want to change the trend line to this low, and even this one bring it up to this low, so you will get there. So again, 29.47 would be kind of like a probable possibility to see if market is getting down there. So if you want to just put your or if you want to put our initial markup for the chart, so that's gonna be the level. So how far we can get there? So it's gonna be, we are at 3800, 3845 exactly. We need to go down 800, 900 down there. So 900, it's gonna be a severe bear market, right? So but at least we have some levels in our chart. There is no guarantee that we get there, but there are some levels that we need to work out. And if market gets there, so we shouldn't panic. We should just protect ourselves, or we can just get into long position. Even I'm just waiting for this one. I'm just accumulating more cash to get to long position here. So I'm ready. Do I sell my stock right now? No, I don't think so, because those are stocks that I have is investment, right? So they're all investment strategy, but you need to hedge yourself. But again, at the same time, you need to accumulate your cash. Don't buy blindly, right? So buy when it gets to the certain level, and even trading approach is going to be good for the short term, just because we will have lots of volatility. And this volatility, if you play at the right time, at the right side, at the right time, at the right place, you can make money, right? So this is the monthly chart. This is very comprehensive. I know it's longer than usual, but this is the last trading day for the year, so I would rather to have it very complete for you folks here. That's going to be my present to you guys as well. All right, so let's move on to, let's save this one, move on to a weekly chart. So here is the weekly chart. Very technical reaction to this level coming down. We have a nice doji last week, and this week, just last hour, institution bought back just because they didn't want investors or traders going to the New Year holiday in a sad mood. Probably that's gonna be the intention, I don't know, but nicely reacted to this level 3806. That's the level institution bought back, another higher low, and probably market is poised for another upside. So next week, I would say for next 10 days, so my next cycle would be January 10 to January 14 for a reversal, and probably for the top. So I'm not expecting a very kind of like a bullish case here. I just want to see another probably uptick to 39.16 to 39.25 or so. So that's going to be my shorting level. Even if we get there to test this trend line again, so that would be nice selling signal. So it's going to be more than 39.25. It's going to be almost 4,000 so. But again, so that's going to be possibility. Again, we are not forecasting. We are just exactly 4,014. So we are just anticipating if market moves to the upside, what level we should be ready for take another position, probably on the short side rather than long side. You know that I'm in call option with Tesla. Tesla had nice momentum and I'm with it. Probably next week I will close that call option with profit. But if market shows some bullish momentum, why not? You can get a relief rally, because these relief rallies are very sharp. So look at that. So look at that. Look at that. So all of these candles are very sharp to the upside, and we should take benefit out of it. and there is gonna be probably another relief rally to the upside for the next week or so. The first week of the January could be a positive week, but I'm not sure for the rest, especially when we are getting to January 18 and after that. So again, I would be in the cautious mood, but right now probably we will get another bounce to the upside to test this trend line and middle of this shadow, and kind of like this topping formation, and then sharp sell-off after that probably is expected for the March low, probably around this area again. I'm just stretching my marking area here. So this is going to be my rectangular. I just update that one. So that is a possibility to get there and then coming back down for, I don't know, 4 to 5 weeks going down to this level. Going to daily chart. So here's the daily chart. Nice bearish consolidation. Okay, before getting to the daily chart, let me just show you the momentum. Still momentum wise, you see the momentum is in downside and we are not getting to the oversold condition. When we get to the oversold condition and when we get to the certain level, probably we can buy. Same here and same there, but we are in no man's land right now, so no not fast line or slow line, they are not in oversold condition, so probably we should wait for another 2-3 weeks to come down to the oversold condition, and then we can get a bounce. Right now we are just sitting on the side waiting for the bounce and then short the market. Okay, so going to the daily chart. So this daily formation gives me a confidence that we are probably get another bullish momentum to the upside. So look at the dragonfly doji to the upside. So this is not followed through based on yesterday's candle. Yesterday candle was nice. Today candle, especially last hour, I should say last 5 minutes of the market, just went crazy to the upside. And this is a good sign, just because institution came back and bought the market. Here's the white range bar. It doesn't engulf this to the downside. So again, still 38.23 would be a nice buying line or buying area, that when price is getting below this, institution just backing up the buyers and market just went up. So next week again, or next trading days, the next level would be 38.86 and 39.15. So that's going to be another level, right? So just mark it in your chart if you have it. But I would say again, when we are getting above a 39.15, I would be ready for short the market. So there is no hesitate for me, at least when we are in this bearish trend line and we are not closing above this. So this is the most important pivotal area now. Before it was August high, right now it is now December high, and this, especially this shooting star, was very, very important. So if we get above this trend line and if we get above this pivot high, so there is gonna be a shifting structure, but right now I don't see that. So probably just a bounce to the upside and then sharp sell off after that to these lows that I put here for a while ago. I think there is a possibility there. All right, so I think I covered everything in S&P 500. It's almost 18 minutes, 19 minutes video. I wish you have a wonderful, wonderful weekend. New Year holiday, just go with your family, enjoy the time, and take care of yourself. 2023 would be another year and another opportunity. Have a wonderful weekend. See you on the chart, folks. Bye bye.